if I can be honest. On Father's Day, I thought we were gonna have a showing of like 7. I'm pumped that 30 people are on. That's amazing. So great job, guys. Leaders on the call, rallying your teams to get on. But guys, so we're gonna talk about closing life insurance. This is I think this is a pretty obvious statement that I'm about to make, but like this is how you get paid, right? Like you got to be good at this, right? You need to learn how to make enough money off your own pen so you don't have to rely on recruiting people to make your money and pay your bills. Why? Because when you recruit somebody and you have to drive through their market to pay their bills, they feel that, right? And they run away from you because you're like a toxic person just trying to suck all the life out of them, right? And we don't want that to happen. We want you to have a successful business where you can make money without your team. That way you're paying your bills. Because then, Luke, when someone's like, hey, how do I make money here? You're like, well, let me show you. This is how. You get referrals, you prospect people, you talk to people, you build relationships, and you make money off your own pen. And then all the field training you do above and beyond that is just icing on the cake, right? So it's our moral obligation to close people and help them move forward. Why? Because if they don't have life insurance right now, it would put them in a better position. Yes or no? Right? So it's our job to, when we're meeting with somebody, to give them enough education to make a smart decision to move forward. But the reality is, if information and education were enough, there wouldn't be 90 million plus families without life insurance right now. Right? Because the information is available. Right? It's out there. You can get life insurance. You can get life insurance and like 3 clicks of a button through Ethos, which is like they're a horrible company, but you couldn't. My point is, you can get it. Right? So guys, what we do is, right, we take care of the clients, we help them, right? But if information alone were enough, there wouldn't be people uninsured. This is a GoFundMe search from Clarkston, Michigan. This was a while ago. I'm not gonna lie to you guys, but the premise is still true. And I looked up Tampa and it was over 1,000 people. When you go to GoFundMe and you search funeral in Clarkston, Michigan, I would challenge you guys to do that. Go later tonight. Go to GoFundMe and search GoFundMe near your area for funerals. And just see how many, what is it? How many people started a GoFundMe for a funeral, right? Because they didn't have life insurance in place. Guys, GoFundMe is not life insurance. And I know you guys know that. But when we're closing life insurance, we have a 5-step process that we're going to walk through. Okay, number 1 is we're going to identify what's going on, right? What type of life insurance do they have? Number 2, we're going to present an option. We're going to present why they need it. Number 3, we're going to ask the closing questions. There's 2 closing questions in an A diagram. Number 4, we're going to do the A diagram, which has the 3rd closing question in it. And then number 5, handle any objections that they may or may not give you. All right, so it's a pretty straightforward process. You're going to identify what they have. You're going to present the solution. You're going to ask the closing questions. You're going to draw the A diagram, and then you're going to answer the objections. Pretty straightforward, right? So once we go through that, when we're in step number 1, we have to identify which of the 5 scenarios does this person have. Right now, if you watched Why Primerica at the KT, which you should have, I'm going to remake that very soon. But if you've watched Why Primerica at the KT, those are the 5 scenarios. Okay, so here's the first one. No life insurance and they're single. Okay, well, there's 3 reasons why somebody that's single would have life or would want to have life insurance, right? Number 1, it's cheaper right now than it's ever going to be. Number 2, this is the biggest selling point usually, is the living benefit, right? Do you have $200,000 in the event of a terminal illness that you could draw money off of and pay for your medical bills if something, God forbid, were to happen to you? And number 3, like, you could leave some money behind for your loved ones. Do you have a mentor or a coach or a family member that really poured into you and gave you a lot of value, and they really helped you? And how would they feel about you if a $150,000 check showed up on their doorstep if you passed away? Right? Those are the 3 selling points. And this is the one, guys, where I don't ever push the sale on this. But these are the 3 reasons why they would want to have it. Another question I always ask them too, and this revolves around the cost, Angie. So if I'm with somebody that is in this category, 3 reasons cost. Number 1, well, do you ever plan on getting married and having kids? Like if you were making your own plan, would there be kids and a marriage involved? Most people are going to say yes. Not everybody, and that's fine. But most people are going to say yes. Or kids or a partner or something like that, right? Well, okay, well then you're going to need life insurance then. And it's way cheaper now. And then the benefit to that is you have a living benefit and you could leave it behind for a loved one right now while you're waiting for your spouse. Right. So that's number one. The second scenario is they have no life insurance, but they're not married and they don't have kids, or they are married and they have kids. Okay. So I'm not going to go over the entire like psychology behind it, but like watch Why Primerica the KT. But the first thing is there's three reasons, right? So Angie, you have no life insurance, married, kids. Great. So there's three reasons why somebody that's married with kids wouldn't have life insurance. The first one is they know they need it, they've just never gotten around to getting it done. Okay. The second one is they're worried about the cost. They think it's going to be way more expensive than it actually is. And it's very important that you say it like this, guys. The third thing, and believe it or not, I've had people that have said this to me. And you're going to say it like this, right? Because and I've had people do this. It's crazy. But believe it or not, Angie, I've had people, and I know this isn't you, but I've had people that have told me, and again, I know this isn't you, but this is one of the options where they don't care what happens to their family if they pass away. And so since I know number three is not you, which one is it? Number one or number two? Oh, well, it's number two. And then you quote them. Oh, well, it's, we know we need it. We just never gotten around to it. Great. Well, I'm here now. You're here now. Let's get around to doing it. We'll take care of it. It'll take you 10, 15 minutes. Right. And it's that is, in my opinion, those ones are the easiest closes because they know they need it. You're on the call with them. It's a lay down. Right. Oh, we need to think about it. What do you need to think about it? You said you've been thinking about it. What are you talking about? Like, we're good. Right. So what if they have group life insurance? Well, there's 4 reasons that group life insurance is bad. Number one, what's the trend right now? Are you seeing people outside picketing and like boycotting stores because their benefits are getting better and better and better? No, it's because the benefits are getting worse. The pay is getting worse, right? So that's the first thing. At any given time, your life insurance could be yanked from you. You would have no recollection of that happening or no say in that happening. That's the first thing. The second thing is you're currently employed, but what if you got unemployed tomorrow? What happens to your life insurance? Does it follow you? Most people say, well, I think it does. And like, well, it doesn't, right? You got to explain to them it doesn't follow you. And if it does, you have to prove insurability and you have to then start paying for it. So you might as well just have your own private insurance at that point anyway. Right. Number 3, you have to be actively on payroll. So like, let me ask you a question. Do you ever take days off? Yes. Okay, cool. Are you ever not at work doing things that potentially you could maybe die from, like driving a car or flying on a plane or on a boat or sitting on a couch chair, right? like yes, I am, obviously. Okay, great. So if you're not actively working and you die, they won't pay out, or they will do everything they can to not pay out. Right. And the fourth thing is a living benefit. Does your work life insurance give you the ability to pull money out of it if you ever get diagnosed with any sort of terminal illness? And the answer to that is always no. I've never seen a work policy that lets you do that. If they have it, they pay for it. Okay. So let me just be very clear. I have seen life insurance policies from work that give you that option, but that is an additional rider that they throw on. That's not the base in the life insurance. Okay. So those are my 4 scenarios there, right? So I'm explaining it to them. Well, I have it through my job. Okay, awesome. Well, let me ask you a question, John. Are you seeing people picketing and boycotting businesses because they're getting better and better benefits, or are they getting worse and worse generally? Well, they're getting worse and worse. Okay, great. And John, do you ever plan on maybe working somewhere else? Like if let's say I had a different convenience store and I offered you 10 grand more a year to do the exact same thing you're doing right now, would you switch jobs? Yes. Okay. So there's a chance that you might not work there for the next 30 years, correct? Correct. Okay, awesome. So if you ever switch job to job, what if that job doesn't have benefits? You don't have them. Right now, you also have to be actively on payroll and working. Now, John, I'm sure you take days off and vacations, right? Yes. Okay, great. Now, if you're on vacation, you pass away, this policy is not going to pay out. And the last thing, John, is there's a living benefit. John, if we could get you access to $100,000 to $200,000 in cash that you could use, God forbid you get diagnosed with some type of medical illness or a terminal illness, wouldn't that be something that was beneficial for you to have so you didn't have to dip into your retirement and your investments? Yes, that would be beneficial. Okay, awesome. And then I'll teach you guys what to do next. Okay. Now, what if they have permanent insurance? Everybody type permanent in the Zoom chat really quick. What does permanent mean? Whole life, IUL, variable life, fixed, whatever, blah, 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 whole life, cash value, anything like that. Okay. That's what permanent insurance is. So what if they have permanent insurance? Well, You draw this picture. You can pull up, share your screen. Well, is it okay, Luke, if I tell you how how your permanent insurance policy works? They will pretty much always say yes. Another way I ask that is, hey, did your agent ever tell you like how it actually works? Like, well, it's like some money saved up in some insurance. Okay, cool. Well, let me draw you a picture real quick. And so I'll draw this. You could also use the bucket. I'm not going to give you the bucket tonight because I don't have enough time to do that right this second, but I will do that one day this week. If remind me, and one morning this week, I will do it. Okay. So it's very simple. You put their premium at the top and you put their cost of insurance down on one side and you put the cash value on the other side and you give them the 3 reasons why it's bad. You don't see your money for 3 to 5 years. If you loan it, you're paying it back at a 6 to 12% interest rate, which is way higher than a personal loan from the bank. And if you have the money, why do you need to borrow it from yourself anyway? And then number 3 is it's option A or option B. That's it. That's it. That's it. Hey, you get the death benefit or the cash value. I'm sure, Mr. and Mrs. Client, when you set this up, you wanted your kids to have both. Am I right? Yes. Okay. So wouldn't it make sense that we set something up so they have both? Yes. Great. Let me show you how this works. Okay. Guys, you got to get good at closing this stuff, but I'm just giving you guys the basics right now on this because you need to see how it works, right? I will go through each one of these over the next couple of weeks if that would be helpful for you guys. But if I'm going to be doing that, y'all need to be setting kitchen table appointments, right? Because if I'm going over this stuff and you're not practicing it, it doesn't matter. Right? If I teach you how to shoot a basketball and then you don't ever touch the basketball, it's useless time, right? Like you guys need to be on appointments and setting appointments for yourself and your team so you can practice these things. And I promise you guys, I'll train you up as best I can, but we have to teach people how to get in the field. What if they have another term policy? Right? I went over this the other day with you guys, right? This is what it normally looks like. And I talked about this last week. So I'm not going to spend a lot of time on this right now. Go watch 301 Dan Romai. By the way, our YouTube channel changed names from Dan Romai to Redemption Base Shop. If you're looking for it, search Redemption Base Shop. You'll see our logo on the thing. So it's the same YouTube channel. I just rebranded that because I'm starting a personal channel for like life insurance stuff for marketing purposes. But stay with this page, this normal YouTube page here. But if you search Dan Romai 301 week 1, it should pop up. And that'll give you all the term stuff. And honestly, like if somebody already has term, I will try to close on the first appointment, but not real hard. Right? Because they already have the best type of life insurance. It's just not the best one. Right? And so just make sure you guys know that how to close that, right? And now, well, Mr. and Mrs., and this is the question though, right? This is how you close it. Mr. and Mrs. Klein, are you 100% sure that you're not going to need this coverage at all in 10 years or 20 years or 30 years or however long the term is? And they're pretty much always going to say, well, no, we'll probably still need it. Right? So, okay, well, are you going to be able and willing to pay 10 to 30 times the price when that term comes through and it renews? And they're going to probably say no, right? Okay, great. If Zoom boxes are in the way, if I could get you a policy that is similar in price, but lets you keep a substantial amount of coverage. I think I spelled substantial wrong, but I typed substantial, guys, sorry, and it told me it was wrong. So I just typed that in and let it go. So whatever. Anyway, so if it lets you keep a substantial amount of coverage beyond the term with no premium increase and no health check, would you be open to looking at it? And they're always going to tell you yes, because you're exposing the nightmare to sell the dream, right? You're telling them about how their policy is going to be bad first. Then you say, hey, you know what, Mr. and Mrs. Client, if I could do this for you, would you be open to it? They're always going to say yes. Sorry, I'm getting attacked by a mosquito right now. So that's why I keep bending over. And then you talk to them about the decreasing term to 95, which is actually decreasing term to 100 now. You talk to them about term stacking and different things like that, right? Then we got the closing questions. There's scenario 1, 2, and 3. Closing questions for scenarios 1, 2, and 3. So, hey, listen, if money weren't an issue, how much coverage would you like to have? Why are we asking those questions? Because they don't already have private insurance, right? So we got to get that. We have to get a price point anchor for them. Okay. Everybody type anchor in the Zoom chat. You got to have an anchor for them. So if money weren't an issue, how much coverage would you want? Most people have no idea what you're asking right there. They're like, well, 100, I guess 50,000. And I always say, well, you'd want all of it, right? And they say, yes, I'd want all the coverage I could get, right? So I just like, obviously you want as much as you can. Now, and then this is where I do the dime with them, right? Debt, income, mortgage, education for kids, or expenses. And so I'll get a good idea of how much they actually need. Then I go to question number 2. So obviously money is always a factor. So how much do you feel like you could comfortably invest on a monthly basis to make sure your family is taken care of? And before you answer that question, most of our clients say somewhere between $50 to $100 a month. Some say over 100, some say as little as 30 or 40. Where do you feel like you could be comfortable? Okay, so let me go back. Right, so number 2, obviously, Angie, money is always a concern. Right, so how much do you feel like you could invest comfortably on a monthly basis to make sure that your family's cared for? And before you answer that, most of our clients, before you answer that, most of our clients say somewhere between, this is where you put them in the price that you want them paying. So you need to know your quotes at least relatively well enough to know about how much it's going to cost for someone like that. Okay. So if they are 57 years old and they're a chain smoker, it's going to be way more expensive than somebody who is 23 and healthy. Right. So you need to know roughly the price points. Now, I also, the reason I asked this question this way, how much would you be willing to invest? Because I want to know how much money they want to put away for life insurance and investments, right? So I personally actually anchor this price point much higher. Okay. So Angie, the way I ask this is, and it's the same frame, it's just a higher price point. Right. So here, watch, this is how I ask it. So obviously money is always a factor. So how much do you feel like you could comfortably invest to make sure your family was taken care of if you died too early or if you lived too long? And obviously, and before you answer this question, most of my clients say anywhere between $200 and $300. I have clients that are over 1,000. I also have clients that are down around 50 to 100. Which of those 3 sounds like it would be best for you? They almost always will either pick the middle, or they'll tell you, I could do like 100 to 200 or 100 to 150. Like they'll give you an honest price range right there. I want them to see like, hey, I do have clients that are doing 2 or 3 grand a month in investments, because if they do that, they're going to be set. Like they're going to be set for a long time, and it won't take them a long time to get into a good place. Right. But I also want somebody to know that, hey, if all you can do is $50 a month, well, that's fine. But I need to price anchor them in the beginning where I want them to be. Right. Because I know, Angie, I know that a $500,000 policy on somebody who's in their 40s is probably going to be around 125 to $150 with basic health. Right. And if they're a little unhealthy, it might be more. So I just want to know what I'm working with. Well, if they're like $500, Luke, I'm like, sick. We're gonna get you a max case policy. Well, I don't tell them that because that's what we call it. They won't know what that means. But I'm gonna get you a policy for about $500,000, which will cover your income, pay off your house, pay off your cars. And then what we're gonna do is we're gonna invest the rest into a Roth IRA. And if I'm not licensed, or not a Roth IRA, but it's some type of an investment. And if I'm not investment licensed yet, which none of you guys are, what I'm gonna say to them is, what I'm gonna do is we're gonna get the life insurance set up for you today. Okay. And then what we'll do is we'll come back and we'll set up the investments. I'll put you on the calendar with our investment specialist, and they'll take care of you. Okay. And now all those investment clients are coming back to you once you get your license. All the residual income from that's coming back to you, the assets under management and everything. But don't make your client wait to invest because you haven't put the time forward to take and study for the test. That is selfish as hell. And I'll be honest with you, your clients will forget to do it. And then here's the fact: 30 years from now, when their term expires, because it will, because it's a term policy, and you didn't set them up on an investment, they're going to be pissed. Why? Because you told them that they were going to have this, and you said, hey, you should have somewhere in this ballpark, and you have this type of life insurance, but they don't have either anymore because you didn't go get your damn test done, and you were too selfish to book the appointment to get them on the investment schedule so they could go take care of their finances while you figure out how to prioritize your time to pass your SIE. I'm sorry, but like I'm telling you guys, like there are so many agents that do that in Primerica, and it pisses me off because it's a disservice to your clients. You have to stress booking that investment appointment. Now you can't control if they actually show up to it, but you gotta put it on the calendar. Y'all should have my scheduling link. If you're on Cassie's team, you need to have Cassie's scheduling link, and you have to book the appointment. Okay, because guys, they have to have investments. Life insurance, no one can retire off of life insurance alone, period. I don't even care if it's an IUL. I don't care if it's whole life. You can't. It's not possible. You will not have enough money. You have to have investments. You do. You just do. So make sure you guys are booking that. Sorry, I got on a little soapbox there. I'm sorry, but you guys need to book those appointments. Okay. And so then the other thing, the third question I would ask them, is there anybody, and I kind of asked them this in the beginning when I'm forming them in a sly way, right? Like, hey, are you married? Are you kids? Did you make your own decisions? Like, is it just you? Like, I kind of been feeling that out in the beginning. So I don't ask this unless I feel like I absolutely need to. But hey, is there anybody that you feel like you would need to consult with prior to starting working with us? Or do you make your own decisions? Oh, I make my own decisions. Great. Well, I would need to talk to my mom first. Okay, cool. Well, if you set up a financial plan, do you think your mom would be happy with that? Yes. Okay, great. Well, let's set it up. We'll get you all the statements. Go talk to your mom. And if she thinks it's wrong, have her bring her investment licenses and we'll talk about it. Guys, I will talk to people like that because they say dumb things. Like, oh, I don't know. I got to check with my aunt. Cool. I mean, awesome. I definitely want you to talk to your aunt, but like, is your aunt licensed to give advice in the thing that you're asking her for advice on? And is your aunt living the life that you want to be living when you're her age? And it's usually no to both of those questions. Sometimes it's like, well, my aunt's an investment advisor. She's got a license. She works for a bank, whatever. Sweet. Show her everything we set up. And if she thinks it's wrong, I'd love to have a conversation with her about why we set it up that way. And then you draw the A diagram. Do y'all know the A diagram? Put yes or no in the Zoom chat for me real quick if you know what I'm talking about. If you are not drawing the A diagram, this is why you don't close. Okay? Ready, watch. You will close almost every policy that you write if you draw the A diagram. So who can unmute themselves? First person to unmute themselves and say, okay, Angie, I see your hand. Go ahead.
I can.
Who said that? John? Was that you, John? You were first. All right.
Yeah.
Cool,
Yeah.
John, I got you. So, all right, I just went through the presentation. John, you want to get life insurance, okay? So, John, did you ever go to college before?
No.
Awesome. Do you know anybody that did, like a family or friend or anything like that?
Oh yeah.
Cool. Where'd they go? What school did they go to?
Oh man. Radford, UCLA, University of Florida, all
Perfect.
kinds.
So when they were applying for college, did they just like show up one day and move into an apartment, buy all the books and clothes, or did they have to apply first and get approved and get accepted?
Oh yeah, they definitely had to go through a little bit of a headache to be able even to go tour it.
Right. So, John, same kind of thing's going to happen here, right? We're going to get you $500,000 in conditional coverage on your life insurance right away. Okay, you're going to have medical insurability forever. So, meaning you're always going to be able to have life insurance until you're 100 years old. Okay, we're the only company that offers term-to-term conversions, right? I already explained to you why the other types of coverage are bad. So, we're the only company that won't try to get you to switch to one of those later, right? On top of that, you're going to have access on this particular policy to $350,000 in the event of a terminal illness. John, do you currently have access to $350,000 if you needed it?
No.
So that's a huge benefit, right, John? Also, we're gonna have medical insurability for all the kids as well. You have $25,000 on kids coverage, and John, it's $85. So, John, are you familiar with how escrow works, like for buying a house or something like that? Have you ever heard of that before?
I'm relatively familiar, yeah.
Okay, so basically what happens, John, is one payment goes into what we call the hopper, right? So we're into an escrow payment. All right, so you're going to make an $85 payment that's going to hold your life insurance. You have $500,000 in coverage in place. There's four things that could happen, right? I'm going to say these slow so you can write them down. Four things that can happen. Number one, if you pass away sometime in the next 2 to 3 months, Primerica is going to pay you out $500,000. Okay. And all that they're going to do is keep that one check for 85 bucks. Okay. So that's most likely not going to happen. I think we could both agree you're probably going to live longer than the next 3 months, but God forbid something happens, that will happen. Option number two I don't know what's happening right now, but I'm muting you for a second. Option number 2, John, is that they decline you. Okay, so if you get declined for any reason, medical issues, felonies, anything crazy like that, right? You're going to get declined and you're going to get your $85 back. All right, so that's option number 1. Option number 2, let's say you get accepted and they say, hey, you know what? We will cover you. And John, and guys, this is exactly how I say it, right? You get accepted, John, and they say, we will cover you. And then, John, you decide that you don't need life insurance. You don't care what happens to your family. If something happens to you and it's not important to you anymore, then we'll give you your $85 back. Okay, if that's something you want. Now, John, the third and most likely scenario is you're going to get approved at or better than what we're talking about right now. All right, and from there, John, what's going to happen is that $85 is going to then, after it's accepted and approved, it's going to cover month number 1. Okay, and then you'll have your monthly payments thereafter. Does that make sense, John? So you're going to have conditional coverage right now for about 2.5 months. You're going to make a single payment. You'll have life insurance for 90 days or so. Okay, and then after that is in force and approved, your escrow payment counts towards month number 1, and then it's monthly thereafter. John, does that make sense?
Yes.
Awesome. So then you say that. So great, John. What we're gonna do is we're gonna get you started. I'm gonna ask you some questions, and if you could grab your driver's license, that'd be awesome.
Cool.
That's it. That's it, guys. It's not, I'm telling you, if you don't use the A diagram, you are leaving thousands on the table. Here's the A diagram for you again. Screenshot it, all that fun stuff. I'll take a day. I will take a day this week, guys, and I will train you on how to sell on all 5 things with the A diagram. Over the next 2 weeks, I'll go over the A diagram on all 5 scenarios for you. Okay, exactly how I would say it, why I say what I say. I'll explain it. I'll let you ask questions. Does that make sense? Are you guys good with that? Cool. That's everything, guys. It's that simple. Y'all don't overthink closing life insurance, guys. Like, most people know they need it. Even a lot of single people know they need it. Right? So we got to make sure we're taking care of it, guys. And we have to educate people on it. And we use the A diagram so they don't feel like they're pressured into locking themselves into something right now, because they're not. I mean, the reality is they cancel it at any time. Obviously, we don't want them to, but the A diagram is like a pressure valve, right? On a pressure cooker. You push it to release the pressure so the thing doesn't blow up, right? In the sales process, they probably are going to feel like, and I'm just being honest with you, they're probably going to feel a little bit like you're selling them, right? Because they don't have it and they know they need it. And naturally, right? Naturally, the walls go up. So we need to release the pressure by drawing the A diagram and saying, hey, there's still options. Like, we're not locking you into anything right now. Does that make sense, guys? Is that helpful? Awesome, guys. Hey, we're going to go back to the main breakout room. Don't leave just yet, guys. We're going to go over the last couple announcements. But everybody go ahead and go back to the main breakout room if you would.
Have to do that. Let me see. Oh, everyone's back. Let me see what other question there was. Oh, okay. There's just a comment. All right, I'm done, Dan.
Awesome. Let me